Well, let's start off with your overall analysis of what we're seeing play out on the markets at the moment and what you're forecasting for the trading day ahead.
Morning, Alishia. Yesterday was another downward movement in the market, but most of the stories actually came from the food and beverage sector. As you mentioned, we saw some corporate actions from Dangote Flour, Dangote Sugar, Nestle, PZ, amongst others. I'll talk a bit about Dangote Flour, where we saw them report their full-year results to 2008 and propose a 20 kobo dividend for the year, where we've actually seen margins increase with that particular stock, revenues growing, but in particular margins and particular PBT has actually increased into triple digits, and we're seeing an improvement even in the 9 months reported to September 2009 as well, where the company also declared an interim dividend. And as you said, they gained the maximum 5% on the exchange yesterday.
If we look at that counter, if we just delve into some deeper analysis of that specifically, I mean, looking at the profit after tax figures for the full 12 months to the end of December, we saw Dangote Flour Mills present a 421% gain. And I think that's important to emphasize because many of our viewers just not familiar with just how extensive that gain had come in at. What's actually driving such growth and such earnings in this company?
It's difficult to say without the perspective of some detailed results from the company. As you know, the results they release to the exchange are quite high level. But I suspect that margins being driven in the business, cost savings, I would say that it's actually quite difficult to understand those sorts of margin improvements given what's happening in the rest of the sector, where we're seeing margins declining from the likes of Nestle and Dangote Sugar. And in particular with Nestle, we're actually seeing some liquidity pressures, it would seem, where we're seeing their cash positions decline significantly from 6.2 billion to about 800 million in the 9 months that they reported. And in particular, they've also increased their short-term borrowings to about 3 billion. So we're seeing the increased interest costs having a downward pressure on Nestle's margins. So it's quite difficult to understand what's driving Dangote Flour's improved margins and improving margins, because they didn't only improve in the financial year 2008, but we're also seeing improvements throughout 2009 so far as well.
Well, with that limited understanding of what's driving earnings, of course, very difficult at this stage to forecast the sustainability of such trend. But would you have a perspective on that, on whether we're likely to see sustained gains on Dangote Flour Mills moving forward?
But I think it's important to understand where they're coming from. In 2007, which is the prior figure, we're seeing margins of about 1.6%. They steadily increased to about 6.6% in the financial year 2008, and they're now at about 11% in the 9 months to September 2009. So if you look at the number, if you look at the number compared to its peers in the sector, in terms of the actual marginal, it's not that great. So in terms of sustainability of their profitability at these levels, I would say that that is a possibility because we're not seeing ridiculous margins being reported by the company.
Let's take a closer look at Dangote Sugar then. I mean, profit after tax for the 9 months through to September coming in 35.9% lower. What are some of the pressure points here, especially in a climate where we're seeing other sugar producers on the continent take extreme advantage of their ability to produce ethanol?
I think firstly, in terms of commodity prices, I think Dangote imports raw sugar into the country and then processes it and sells it on. So in terms of importation of sugar into the country, I think there have been some increased price pressures there, which would have affected the company's margins, firstly. And on the other hand, I think that there's also general cost pressures from operating in this environment, the cost of power is extremely high, which would drive margins within the company lower. And I think it's not apparent in the numbers, but I think once you look at it, there will also be some telltale signs around possibly increased borrowings within the business as well.
Let's take a look very quickly at PZ Cussons of Nigeria, out with 3 months results to the end of August. We saw profit after tax coming in close on 4% lower there. Your overall view on PZ Cussons at the moment? PZ Cussons, I'm not quite sure what you said about their results, but I think looking at the results that were released yesterday, we saw some steady growth in their revenue as well as PBT numbers, and they're reporting quite consistent margins at about 4 or 5%. That's the PBT margin. So in terms of the progress being made by the company, it's fairly steady. There's nothing untoward in terms of what they reported yesterday.